All right, everyone. Well, we are looking at the, we're looking at the euro. I was going to say we're looking at the British pound, but we're not. Okay. And my computer is slow. Well, we are waiting for the British pound to load up. If you're a Plus member, I just posted a video today with the fifth and final update for the 4 dates series. You're going to want to check the Plus membership page to get the rest of that. All right, now we are looking at the British pound. Here is our weekly bar. You can see that after we cleared the prior support area up here, this was last week, we've had a much smaller range. I'm not sure why this thing is printing out some of these extra bars. Looks like more data issues. There we go. As I was talking, I thought that didn't look right. Okay, now here we go. Looked like we were still looking at the euro chart. My apologies. After we broke, sorry, I was just pausing to gather my thoughts. After we broke down from our support area here, we are looking at a much smaller range for today, down near this kind of final support level, which is at least the beginnings of support holding. In fact, this pattern of increased volatility to the downside and then a small range does indicate that the sellers are not able to follow through and that buying is coming in. But remember, that does not mean that the buying has to continue. All that means is, for the moment, we're looking at the buyers continuing to come in and support the British pound. Once we clear, or if we clear rather, this level here, which is down around 35.20, then all bets are off. And my guess is that we're going to have just a rocket ship ride to the downside. The flip side of that is, if the market does decide to try and make a run to the upside, we have a considerable amount of overhead resistance, starting with this area here and then moving up all the way into this area here. All said and done, we basically have significant resistance all the way up through 5,800 on the British pound. So we've got to be prepared for that. Now, in terms of overall patterns, we're still running in the area of, or are running in the counter trend type of market. And we have to be careful that we don't start looking for a breakout too early. We need to stay focused on counter trend trading for now, and really to the downside until we break below the 35.20 level and then give a retest back up. In other words, let's focus on the weekly chart here. We would need to see the market break down below 34.20 and then back up like this in order to confirm that our resistance area has been put in. That's going to be a critical factor in the coming weeks if the market does manage to move its way down. As far as this hourly chart here, you can see really all the way back into November timeframe, we have a very nice trading lane that the market has decided to fall into. The recent trading has, of course, moved to the downside. And so we are beginning this compression pattern that we need to watch very carefully. We don't have a good flag or pennant to trade off of, really. What we do have here is, I guess, a sloppy triangle pattern that's beginning to form. Again, the key, the important part is not, excuse me, trying to, figure out what kind of pattern it is. Or if adding a pole here would make it into a pennant. Remember, that's not the critical part. The critical part is recognizing the compression. Okay, whether it's a flag or whether it's a pennant or a triangle or a wedge or any one of these other crazy names we come up with, that the name isn't important. It's the concept. The concept is compression. Once you get compression, then you get breakout. That's what we're looking for. And so once we break to the upside, we're going to need to see the market get back above the lows here in order to have much of a chance of getting going to the upside. Just so you can see it, that's the 40.29 level. We've got some support from back here. You can see price reaching for it again here and then holding at that level here. Once we break above that 40.29 level, I think that's where we're going to get our first retracement to. And so, we've got about 100 points to 100 pips to the upside worth of potential, but no real clear pattern. At this point, remember, the trend is down, price is looking down, the path of least resistance is going to be down. So any trades to the upside have got to be taken with a counter trend trading mindset and realizing that once price gets into resistance, the likely reaction of the market is going to be to come straight back down to support. Now, because we're in a counter trend trading environment, it's very difficult to talk about definite buy and sell points. We really need to wait and get confirmation from the marketplace. The pound is actually in support here at 37.44. And so coming into the London session, if we do manage to hold these levels, you're going to want to look for a 3-bar reversal to catch a possible move back to the upside. Once the market gets into the 41.40 area or the 42.50 area, that's where you're going to want to look for signs of a reversal, either catching a 3-bar reversal, hopefully getting the market coming back down to support, or waiting for the market to break to the downside and then push back to the upside in the little dipper pattern, again hoping that the market will move back down to